thank you all for being here. I did want to clarify that all of these concepts that I'm going to be talking about are very dense, and I could probably have a presentation for each of these slides. However, I am going to just give you a little introduction and explanation. And I think that should kind of get you started to like know what kind of things you should know as a new owner, or even if you already have a business running. These are the things that some people don't know. So these are good things to know if you're in the business world. We can start with the next slide, please. So when you're going to open a business, the very first thing when you show up to your CPA that you are required to know or to decide is what type of entity your business is going to be. There are three of them. The first one, it's a sole proprietorship. I have a hard time with that word. Essentially what it means is that it's just one owner and it's an extension of yourself. So the IRS looks at the business and you as the same. Any profits are reported in the individual's tax return as earned income. And also any losses are also reported as losses of your income. I think it's the bad thing about this is that you're also liable for any business debt, any accidents that take place on premises. If the business gets sued, then if the business has any debt, the creditors can take away your home or any assets that you have. And the thing is that as a single owner, you are responsible for every single thing that goes on in your business. So it's quite a lot for a person, but it's also cheap to kick off. If it's a profitable business, then it's all good. But most of the time it's not, especially the liabilities, from what I experienced. Next, please. The second type of entity is a limited liability corporation, also known as the LLC. And this LLC, you can have one owner or multiple owners or members. They're called members. And in order to choose this type of entity, there are requirements. You're required to file two documents. One, it's called the Article of Organization, and the other one's a membership agreement. And these two documents are essentially helpful in order for the business to plan how the business is going to run, for the owners to plan how the business is going to run, who has how much percentage of the business, if there's any owners that are also going to be employees, who decides what to buy. Like, this is essentially how everything is decided. For tax purposes, any profits or losses don't affect the owners directly. Obviously, if the business has any losses, then the owners don't get paid. So it does affect them, but not directly. For liabilities, this is a huge one that the LLC provides. It gives them protection, legal protection. So any lawsuit, any debt, anything protects the owner's assets, personal assets. Next, please. Okay, so this is what Arturo went over. And these are co-ops. There's a lot to talk about co-ops, and but essentially is anyone who is part of anyone who works on this business owns the business at some level. And there's a lot of democracy going on, but this is like probably the biggest one as far as how dense it is. Next. Okay, so the second thing that you do after you choose what type of entity your business is going to be is you have to issue an EIN number. And essentially what this is like a social security number, but only for business purposes. So it is the business social security number essentially. And you apply online, it's free. And you can use it you have to have it to open a bank account, to hire employees if you're gonna have employees, and then to file tax returns, you have to have this number. Next, please. So after you have the EIN, you have to get, well, they don't have to be in that order. You don't have to have an EIN in order to have a state ID, tax ID number. So this is provided by New Mexico. And essentially is to, it's a 10-digit number, I believe, if I remember correctly. You also apply online, it's free. And you need it if you're gonna perform business in New Mexico. You also use it to file employee state tax withholding. You use it to file workers' comp, and you use it to file gross receipts tax. Next, please. So the gross receipts tax is essentially the tax that you pay in order to perform either a service or a sale. So it's the percentage that you pay from your total sales. It's a tax that is imposed, I guess. So the two main one is if you do sales, if you have a retail store, I used to work at a liquor store a long time ago. Everything was taxed. Anything that you see under your receipt when you go to Walmart to buy I don't know, dish soap, and you get taxed, that's the gross receipt. If you perform services, let's say you're a hairstylist, you're supposed to pay gross receipts for the fee that you charge your customer. Okay, so the rates, yeah. What happened? Did anyone say something? Sorry. Okay, I'm just gonna keep going. Sorry. So the rates are different depending on which county you're in. You can look at the rates online on the same website. It's called the NMTAP, and it's run by the New Mexico Tax and Revenue Department. Normally, they make changes twice a year. So every December and every June, they release the new form, the new chart, and it doesn't really change by that much. It only changes by a few cents or by very little percentage. But you have to be in the lookout for any changes. And then to file or pay this tax, you have a bunch of choices depending on how big your business is. The most common one is that you pay on the 25th. So let's say on May 25th, you pay and report the taxes for April, for all of April. So you have 25 days to make your calculations to report and pay. And you can also pay quarterly, twice a year, or at the end of the business fiscal year. So here's a little example that I did. Let's say your business made total sales for the month of April for $15,000. That's the total, that's including the taxes. So the way you calculate it is you're supposed to remove the tax rate and you do that by dividing by 1.0 and then the rate, whatever the rate is for your county. And then it gives you the total gross receipts without your tax included. So in this example is almost 1,400. And then from that total, you calculate your tax. Not from the total at the very beginning of this formula. It's this other total, and it gives you $1,096. And I mean, you have the option of not charging the customer that tax receipt, the gross receipt tax. But if you look at this, it's a lot of money to pay out of your pocket. So I would charge it, but you don't have to. This is, you could, but you don't have to. And every gross receipts tax situation is different, you guys. And I'll show you why. Can you go to the next one, please, Emma? So there are exemptions from gross receipt tax. And what is an exemption? Is essentially a not taxable amount. So these are amounts that are not taxable at all. The list for this is so long, you guys, and it's different for every business. You would have to like kind of figure it out with your CPA, or they also have a list of what is exempt in New Mexico for the gross receipts. I'll give you some examples. I used to have a client who was a dentist, and anything that was Medicare from the government, anything that was paid directly from the government was exempt. But anything that was paid from a regular client cash or with their credit card, or anything paid from dental insurance, a private dental insurance, then that was taxable. So this person had exemptions from the government, but also had to report taxes, gross receipt taxes. And then another example is my husband's IT consulting company. So he works from New Mexico here. He works from home, from his computer, but the servers and the computers that he performs the actual work at are in Pittsburgh. So he's exempt. Even though he works from home in New Mexico, the equipment, it's not in New Mexico, so he's exempt. When I work on my clients from my computer, from the very same office, because my clients' computers, I work remotely sometimes, and the client's computer is either in Santa Rosa or in Albuquerque or in Placitas. Here in New Mexico, then I pay taxes. I pay gross receipts taxes. So you see why it's every situation is different. I used to have another client who was a psychiatrist, and she had contracts with she had tribal contracts, and I think she would make like $26,000 a month from tribal contracts. So she didn't even have to report it because that's exempt. She would just report it in zeros. Whereas my husband would have to report how much he made, but then it would be exempt. So he had to show an amount, but the psychiatrist didn't even have to do that. She would just report zeros. I know that some farmers were supposed to be here, so I Googled and researched a little bit about what type of exemptions they had. And I found a couple, a bale of hay, they're exempt. Heads of lettuce, they're exempt. Unroasted sack of green chili are exempt. But if they roast it, then now it's taxed. So that's why you have to be very careful of knowing what's exempt and what's not. Okay, next. So here's an example of what how you should calculate your sales and how you should report it to NM Tax and Rep. So let's say you made $300 in sales, right? And these are from sales that are taxable. So you take out the gross receipt tax rate, and you end up with 277. And you are required to report deductions or exemptions, which in this example are sales from customers outside of New Mexico, $200, and then gross receipts from sales to New Mexico customers who resell products. So people like Sam's Clubs and Costco, that they sell some items that to businesses, and then the business resells those. So those are exempt for Sam's Club. Like they're not supposed to charge tax, and they're not supposed to report tax. So those two items are exempt. So your total gross receipts are 577.78, but you only pay tax for the 277.78, and everything else is exempt. Okay, next, please. So another thing that I think a lot of people take for granted, and I've seen some of my clients that sometimes forget about this. They forget their payment, or they just don't think it's important, but I feel like it is. It's they should buy an insurance policy, and I'll give you two examples of why. So let's say a client slips and falls, and in your business promises, now you're liable for their medical bills. And one of the things that protects you from one of the insurances that protects you from that is a general liability insurance, and it covers any damage. If your building burns down, it covers it, hopefully, for the most part. Another example is if your hairstylist, I don't know, cuts your ear by accident. If you're a hairstylist and you do that by mistake, then you have a professional liability insurance. So it's important to have an insurance, and there's a lot of options out there. Okay, next, please. Okay, so another thing that you should do as a new business owner is create a budget. And I didn't know how important this was until I started working here. In my other jobs, I never really had a budget, or maybe I never really saw it, but it's huge because it gives you an overall view of your business finances. It helps you plan for the future. It helps you know if you're going to be in trouble or not in a couple months. It just gives you perception of what's going on in your business. A good budget should include income, you know, and these are things that you should know if you're gonna have any income from contracts coming up in a few months, or if you're gonna have some future sales that you know are for sure should be included in there. Any operating expenses such as rent, raw materials, if you have a construction company. You should have one-time expenses, which is like any equipment, if you're planning on buying, you know, a truck, anything like that, an X-ray machine for if you're a dentist, things like that. And any profits, any estimated profits should also be included there. Here's some example from El Bosque Farms. And these are all just expenses. You know, shovels, hoes, or rakes, tractors, things like that, all of those things. Next, please. Yeah, thanks. So here's a budget that has operating income as well, not just the expenses, but again, it's the same idea. Kind of estimate what your expenses and your income is gonna be, and then, you know, once the period goes through or passes by, then you can include your actual expenses and then have your differences, and then it helps. This helps you make a better budget for the next time period that you choose to make a budget for, because now you know that maybe you didn't calculate enough for expenses. Maybe the rent went up and you didn't know it was. I mean, normally you do know if your rent's gonna go up, but what if you travel more than you expected to, and so things like that you kind of want to keep on. You need to know the changes, and this is a good way to know. Next, please. Okay. So this is the most boring part for a lot of people. This is my passion right here. I find financial statements beautiful, especially when they add up and they balance. A lot of people don't really like it. They don't get it, but it's I think they give you they tell you exactly what's happening in your business. They tell you like what happened, like what went wrong, how much you owe, how much in assets you have. Like they tell you the real picture of your finances. So there are three main ones. It's the income statement, also known as the profit and loss, the balance sheet, and the cash flow statement. But the cash flow statement, it's only required by bank if you're gonna get a loan. That's like, as a business owner, you don't really look at it as much. But yeah, let's go to the next one, please. So thank you. So profit and loss, here's the layout, right? So it's income, all of your income gets added up, and then you take away all the expenses. It's pretty straightforward. Income minus expenses equals net profit. So your expenses include wages, let's say fuel, seeds, supplies, utilities, accounting fees, legal fees. All of those are in expenses. I have little examples here of like what kind of expenses a farm have. So chemicals, land rent, fuel, breeding, medication, seed, feed, fertilizer. All of those are going in the income statement. Next, please. Thank you. And the balance sheet, this is more complicated. So the balance sheet, the formula for a balance sheet is assets equals liabilities plus equity. So assets, all of your assets should equal all of your liabilities plus your equity. Assets include things like cash, things that you can get money right away for. So cash, any inventory, any assets such as fixed assets like a pickup truck, a tractor, things that you can sell and get money for. Those are all assets. There's immediate assets and there's long-term assets. Like immediate assets are things like equipment. Like I said, you can sell it to your neighbor and get cash right away. But there's long-term assets that are not that easy to sell, like a building or like an investment or like a bond, things like that. And then your liabilities, if you go buy a Ford 150 or 350 and you get a loan for it, that's a liability. Any taxes, any FICA, for us, we have FICA, any employee taxes that we have to pay, that's a liability. Any anything, any loans, anything that business has to pay goes in this section. And then finally, the equity is essentially anything for the owner. So if the owner goes and takes out $50 in cash, then you take it out of cash and you put it in the equity because the owner took it. So anything that is owner related goes to the equity. including expenses. If the owner has to put in $20,000 because the business is not doing well, it goes in the equity as well. That's where it shows. And then I have some examples of what a balance sheet for a farm would look like on the right side. Next, please. So this is a huge one, you guys, building cash reserve, because of, I mean, COVID-19 showed us that you have to have savings. Ideally, you want to start with 3 months, just 3 months of no income, and still be able to survive. A few tips. Sorry. Yeah, I have 2 tips here for to achieve that, and it's to treat your cash reserve like a fixed expense. So treat it as if it's your rent or, you know, your insurance, some sort of insurance, and always try to put money aside, and then keep it on a separate bank account so that you don't even look at it. You kind of forget about it, because it's really easy to just go back and take it out and spend it. Even for us as individuals, it's really hard to save. I know it is for me. I sometimes want to go eat tacos and I don't care about my savings, and I go eat my tacos. Next, please. Okay, I think that's it. And I know that there's other things that maybe I should have covered, but I didn't really feel comfortable doing it because I don't have experience with those things. Like I was telling Katie, like things like how to form a business plan. I really don't have experience doing that because all I do is kind of just the finance side of it. But yeah, I mean, I know it's quite a bit. Is there any questions, you guys?
I had a question, Alejandra. So under the balance sheet, do you also list receivables as an asset, or is that separate? Accounts
Receivables should be an asset, yes. Anything that you're expected to receive, let's say you already perform a service or a sale, but the money's not gonna get here into 2 months from now. That goes into your assets because it's money that you should be receiving. So once you get that money, you take it away from the balance sheets, from the accounts receivable, and it becomes an income.
Mm-hmm. Okay.
And it goes to the profit and loss. Yeah. I can't really see my participants. I'm not sure if anyone else has questions because I can't see. I can't see anyone else.
Looks like Bryce has a question, or at least his hands up.
Yeah.
Okay.
Hello, Arturo. Hello.
Hi there.
Hi.
Hi, Alejandra. Thanks for your presentation. My question is, how do you transition from like a sole proprietorship type of entity to an LLC? And I guess maybe in terms of equity and prior income or payments that have been made, and how that's kind of where I'm at right now, and I'm trying to see how that applies to what we're talking about.
Okay.
If that makes
Yeah,
sense.
so it does, yes. So for that, I know a little bit about it. I know that that it's most of whatever went on as a sole proprietorship goes into the equity of, if you go into an LLC, it all goes into an equity side of it, and then it gives you kind of immediate protection that way. But I do have to ask, I have a couple friends of mine that are CPAs and know better about this, because it is a very, it's quite of a hard subject to dive right into, and it depends on what kind of business you were running, and like how much debt you have, like what your situation is. And so I would have to ask my friends, my CPA friends about this, because like I said, I do know that it gives you protection by becoming an LLC, but I don't know how much protection it gives you. I don't know if it gives you protection from the point of the change, or if it gives you some protection from before that. Like I don't know those details, so I would have to ask my friends about that.
Sure, thank you for that.
I'll get back to you. Anybody else?
Yeah, one question, Alejandra. It's Jose. Do you think you could show us again that equation you used to calculate how much taxes you would owe to the state?
Yeah. Can you go back, Emma, please, to slide number 9, I believe, or slide number 7. Yeah. It's called "What is the gross receipts tax?" Okay. So do you see the little example, Jose?
Yeah.
Okay, so the way it works is, this is your total taxable income, all of it, including taxes. Just, you could even go on your bank statement and get this amount. And then to take away the taxes, you grab that total and you divide it by 1.07875 in this case, because I'm using the Albuquerque rate example. If it was 8%, it would be 1.08000.
Yeah.
So you divide it by 1 point, and then the total should give you the gross receipts by themselves, right, without any tax. And then to calculate the gross receipt tax, you grab that total and then you multiply it by 0.07875 or 0.0800 if it's 8%, and then that's how much you pay in for the tax portion of it.
Nice. Yeah, much simpler than going over your receipts and seeing how much you charged per receipt or whatever. Cool. Thank you.
Yeah.
And I just want to tell Bryce and Adriana that besides just answering the question about how you transfer from sole proprietor into how you transfer assets and or liabilities from a sole proprietorship into an LLC, that in addition to that, we can at the center can actually help you file the paperwork to form an LLC on your behalf. So keep us in mind, and we'll provide that support to you.
Yeah, and I think it's considered a capital opening business in the equity section. So any assets or anything like that, it's considered like something like to start your business. It's considered I guess money that the owner brought in to the business, so it's considered capital if you're bringing in assets. And if you're bringing in liabilities, then it is a negative, but it also goes to the equity. So yeah, like I said, we can totally help with that. I have friends who do this, and I can ask them and get their support, and I know they'll do it.
Thank you. So that would like apply to seed, for example. It would be capital. That startup sense.
I'm sorry?
Like for a concrete example, a seed inventory that would go into a capital, or the capital.
Oh, Yeah, it would be capital. Yes,
And
it
also,
definitely gives you. Mhm.
and also it falls under equity still somehow. Is that right?
It does. It should fall under equity because you as the owner brought that in. You're investing into your business, either by bringing in money or bringing in inventory, or you could also bring in any knowledge, and you can also price that. If you're really good at something that nobody else is good at, then you can. That's also intellectual capital that you're bringing in. There's a lot of things that you can bring in as an owner or as a member. Yeah.
Alejandra. When you own an LLC, it works as a pass-through organization, right? So whatever income that LLC gets, it's still taxable to you, correct?
Whatever income?
Yeah.
No, as a business. Okay, so let's say your business makes 100,000 in profit. Whatever, the only thing that you as the owner, as the individual, get taxed for is if you claim those earnings. If you take out of the bank of your business 50,000 and you put it in your own bank account as an owner.
So you can use the LLC as a holding company. Just hold it in until you need it, use it, right?
Right, you can do it like that, but there's also some, for tax purposes, maybe you shouldn't do that. You should take it out. But yeah, essentially that's the idea. And as an LLC, I think you don't pay that much taxes for the business itself.
Right.
If you get really large profits, you don't really get that much. You don't have to pay them that much tax for that profit. So there's a lot of good things that an LLC offers.
Right, and you could deduct a lot of business expenses, right?
All of them.
You can deduct all of them because you're an LLC, a business. Anything that your business needs and buys, you goes to the profit and loss, and it's all deductible, all of it.
Okay.
And an LLC makes that business expense clear because you're separating the business expense. You have an actual LLC with a name on it and a separate bank account. And all of those expenses you use to run the business are very clearly itemized. And when you do a sole proprietor, sometimes you get a lot of questions from the IRS about you're taking this deduction, that deduction, and they're going to require possibly more proof and probably not give you as much of the deductions as you would through an LLC. So an LLC
Right.
does make sense for a small business, I think.
Yeah. I mean, my
Alejandra?
husband, yeah, go ahead.
Sorry, there was a question from Adriana in the chat about whether labor counts as, I think, capital or equity.
As an owner for an LLC, or?
I believe so. I think that's what
So
you're
for an LLC, if you're an owner and you do some work, and the company pays you, you can either be a contractor, so a 1099, and then you pay your own taxes as an individual, as the owner, but as an individual, or you can do a W-2, which is you become an employee of your own company, and then you obviously you pay your federal tax, your FICA. So there's more taxes that come with being an employee, a W-2 employee. But yes, so you can deduct it as a business. Definitely, you can deduct it as a business.
And a follow-up question that Adriana has is there anything that we need to prepare differently for any legal cannabis related income? And do we pay federal taxes for that?
Okay, say that again, please.
Is there anything that we need to prepare differently for any legal cannabis related income? And do we pay the federal taxes for it?
Yeah, so for cannabis, it's a whole different enchilada. It really is. There's a lot of taxes that a regular business wouldn't have to pay. But any kind of cannabis business, it's very complicated. Like I said, I have another friend who works on a lot of these businesses and has experience with this. So I can ask if they want to email me the question, and then I'll ask my friend, because this is a very complicated type of business for sure. And I do know that there are a lot more taxes involved. I do know that for any profits that they make, you can deposit that amount into a bank account. I know that it should all float as cash. So there's a lot that goes on with that type of business. So please send me an email, and I'll refer to my friend, and I'll get back to them.
I have one other question.
Okay.
And as far as some of the examples you gave for farmers, like could sell a head of lettuce and not be taxed, does that is that the same for a CSA package, like the community supported agriculture produce package? I guess that's my question, is would that be exempt as well when it's yeah.
So I do know that depending on areas of where you farm takes stable area, I know that it should be completely exempt from what I read. The packaging, right? That's what you were saying about whether the packaging matters, or is that what you were saying? I'm sorry.
Yeah, because it will be a consolidation of.
I guess you can repeat your question, because I didn't really understand.
Okay, so like for example, a head of lettuce is exempt. Is that right? And
right.
Then, so if a farmer puts together a produce package that has multiple items, does that still fall under that exempt category?
Oh, I see. I think that a head of lettuce was just an example. But like I said, I really don't like those are just examples that I could find. I need to read specifics for farming, because I don't have a lot of experience with farming exemptions. That's something that I want to work on, but I would assume, but I don't want to say the wrong thing, that they meant by saying a head of lettuce, they meant produce in general. Which is why an unroasted sack of green chili is also exempt, because it's produce, So I want to say yes, but I'm not sure.
Okay, or
it should be exempt.
Where could I find that information, or where is that kind of?
Yeah, so all of this information is so the website, let me tell you where it is. That way you can write it down. Emma, can you go back one slide, please? So you see that the tab that state that NMUS.
Yes.
So that's what the website looks like. This is it. And then some of these links will take you to what you need to know about exemptions.
Okay.
I can send you the actual PDF that they have on their website. I don't know if we have your email. Do we have your email?
Yes.
We should have his email, right?
Wait,
Somebody.
yeah.
Yeah.
I'll say, yeah.
Yeah, we do.
And then I'll send you the link for this for that, for specifically farming exemptions.
Thank you. Appreciate that.
Yep. Anybody else? I can't really see faces, so I'm not sure who's raising their hand or has questions. So just kind of jump in, please.
It doesn't look like we have any more questions in the chat. But yeah, if anybody has any last questions or if you think of any later, you can also feel free to reach out to us. Alejandra is Alejandra at centerofsouthwestculture.org. You can also reach out to Jose and I. I think you all have our email addresses as well, but just in case, it's our first name at centerofsouthwestculture.org. And yeah, thank you all for coming to the presentation. We did record this, I believe. Catering got that going, so we will have the video available later. And we can send that out to you as well as the workbook that accompanies the presentation. So yeah, thank you all for being here, and yeah, we'll see you soon, hopefully.